Thus, I'm formally revising my September XRP price target. To be really honest with you all, I don't frequently make forecasts for particular timeframes about XRP or any other cryptocurrency. However, based on my current market observations, I am really more certain than I have been in a long time that I have a reasonably realistic range for where the price of XRP will be in September. And I believe that many of you back home, who are presumably waiting for XRP to start showing some life, will be extremely surprised. But I think you guys should be aware of the many incredible things that are now taking place. I'm going to get right in and share my thoughts with you all. Now, this is just what I think. This isn't advice on finances. Press the like button to make this video visible to the entire XRP army. Having stated that, I would want to draw attention to one crucial aspect. Actually, there are probably three distinct factors that have a significant impact on the price of XRP. The first is trade policy. Trade wars, tariffs, and other issues all have a significant effect on XRP. Naturally, interest rates and the Federal Reserve would come in second. Will they reduce the rates? Will they increase rates? That significantly affects XRP's pricing. The third is the evolution of ETFs. Changes pertaining to the technology's real infrastructure, just basic enhancements to the XRP ecosystem that may draw in more investors. Although the ETFs, hidden road, and possibly the Fed cutting rates are the most noteworthy events we believe will occur in September, trade wars are the type of bearish indicator that we are now examining. There are always a lot of different factors that will impact the price of XRP, so I want to start by explaining why I believe certain things will happen in a very specific way with trade wars. After that, we'll discuss the other two factors, and finally, I'll give my exact price prediction based on all of that crucial information. As a result, nothing is absolutely assured. We should be aware that unpredictable things happen frequently. Let's discuss the trade battles, though. Thus, what is happening with India is the most recent and greatest in terms of Trump, foreign policy, and trade battles in particular. He recently imposed further tariffs on India due to their purchase of Russian oil. People are viewing that as an indicator that is somewhat bullish or bearish. Because, of course, we have already witnessed the impact of tariffs. Most notably, after Trump imposed fresh tariffs on Canada, there was a slight market pullback last Friday or so. It is understandable that the markets have also reacted somewhat badly to the Indian tariffs. They are a significant trading partner of the United States of America, and people are unsure of the precise effects of this. However, we've seen in the past that Trump usually changes his mind quickly after having a negative impact on the markets as a result of his tariff strategy. When he reaches a trade agreement or removes those tariffs, the market recovers in a V-shape. Therefore, while this may have an immediate effect on the price, we have seen that it usually does not persist forever, and that there is a very strong recovery after lows. Generally speaking, I seek for a low price, buy it, and then wait for the price to rise in line with some of the other items we're considering. Naturally, the most recent tariffs on Switzerland are another factor. Most notably, the president of Switzerland recently traveled to the United States in an attempt to negotiate a trade agreement with President Trump. He was unable to accomplish this, and now he is returning home with nothing worthwhile to bring with him. Well, this is just another issue that people are considering negatively, but I do think it will be rectified quite quickly. Additionally, we can observe that buybacks have returned, which is crucial to observe what big businesses are doing since institutions, in particular, are investing their capital, which is a positive indication. It's really negative if they're being very frugal and refusing to spend, and you know that they're essentially tightening their monetary policies within their company. However, that is completely untrue. Actually, the majority of US businesses are currently repurchasing their stock. At the moment, they are placing bets on themselves. They're saying, hey, we think our business will keep expanding. We believe that this is a pretty good long-term investment, so we are going to buy our stock. I tend to agree with it, Repurchasing stock makes a lot of sense. Additionally, I believe it's probably not a bad idea to place a wager on your own business during a period when global productivity is rising, particularly if you work in the technology industry. And they're doing just that, and this is a bullish sign once more. Additionally, we can observe that consumers are spending significantly less. In actuality, it is fast deteriorating. Now, because unemployment is increasing, I believe this to be quite important. A specific scenario where the Fed may actually be compelled to lower rates is being created by the decline in consumer expenditure. These figures cannot be disregarded. Above all, I would like to show you guys something on this chart. We can observe that a similar phenomenon began to occur back here in 2020. In essence, during the epidemic, the growth and the calculated percentage change of U.S. consumer spending completely collapsed. People were obviously quite afraid, and as soon as stimulus began, it really took off. At the time, it essentially broke the chart. However, that is not at all what we are witnessing at the moment. Actually, we're witnessing a decrease in expenditure. Thus, it appears that we are in the early phases of the 2020 bull run, just before the Fed began cutting interest rates and everything really went out of hand to the stratosphere. Thus, this is just one more sign that the Fed is most likely preparing to lower interest rates in the US, but it's not the only one. Additionally, as I mentioned before, unemployment is rising and inflation is being fully tapered. Additionally, the Fed will be forced to reduce consumer spending if these trends persist, as doing otherwise will result in deflation. The Fed doesn't want that at all, and that would be awful. They would be expelled for treason if they hadn't lowered rates at that time, since it would have been against the American people's best interests, something they obviously couldn't do. They must take the best course of action given the information at their disposal. In light of that, I wanted to request that Grok perform certain historical-based computations. What do you think the price of XRP would be in September if the Fed were to cut rates? I'm not going to simply reiterate Grok's pricing to you all, but I will take it into account because Grok makes some valid concerns. As you can see, a few factors do influence the price and market movements of XRP at the moment. Of course, we all know that cutting rates would be fantastic. We can see that posts on X generally express a bullish feeling that is almost unbelievable. By September, some predict $10 to $15. I wish to be really explicit. I don't believe that XRP will reach $10 to $15 by September. There is a ton of research on this topic, and I believe we will see something far more realistic than what we have seen historically. The time lag between the Fed cutting rates and the real price increase in the stock market is typically 6 weeks, and it may be slightly longer for cryptocurrency if you check up M to supply. Some individuals, I believe, even suggest 12 weeks for cryptocurrency. Therefore, I believe that we won't see the most of the price action in September if that is accurate, which it appears to be based on recent trends, particularly China and Europe decreasing rates. However, based on current trends, rate decreases are unlikely to be the sole event that takes place in September. We could perhaps receive XRP ETFs as well. To be honest, I don't think the price of XRP will be that high given the rate decreases that are taking place. On the higher end, I believe that if we